Hey everyone, welcome back to Corporate Decoder, the place where we untangle the confusing language of corporate finance to find the juicy insights. And let's just say NGL Energy Partners LP's latest report has some very juicy insights about where the money is going. So, NGL Energy Partners LP dropped their quarterly report, and you know what that means. We are diving deep into the financials to see what is really going on. It looks like they have been making some pretty big moves, selling off parts of their business that were not really working out and focusing on what they think will be more profitable. But is this strategy paying off, or are they just shrinking to get by? Let's find out. First off, let's look at the big picture, their financial health. When we check out their balance sheet, which basically tells us what the company owns and owes, we see their total assets at the 31st of December 2025 were a little over $4.3 billion. That sounds like a lot, but compared to March of 2025, when their assets were closer to $4.6 billion, it means they actually got smaller. This is likely due to them selling off some of their businesses. On the flip side, their total liabilities, what they owe, also went down from about $739 million to around $646 million. So they are successfully reducing what they owe, which is generally a good sign. Now for the part everyone really cares about, the profit and loss. For the last 3 months of 2025, their net income was almost $48.2 million. That sounds pretty good, especially when you look at the same period in 2024, when they only made about $14.6 million. They really stepped up their profit game. And looking at the bigger picture, the first 9 months of 2025, they brought in nearly $147.7 million in net income. Compare that to the same 9 months in 2024, where they only made about $28.4 million. That is a massive jump in profit. It really shows they are making more money than they did before. When we look at income from continuing operations, which is the profit from their main businesses that are still running, it was about $48.2 million for the last 3 months of 2025. This is a big jump from the $23.7 million they made in the same period of 2024. For the 9-month period, income from continuing operations was $108.3 million in 2025, compared to just $48.8 million in 2024. This suggests their core businesses are performing much better. But here is where it gets interesting. They report a loss of over $6 million on the disposal or impairment of assets for the last 3 months of 2025. This means they lost money when they sold off or wrote down the value of some of their stuff. For the 9-month period, this loss was smaller, just over $3.5 million. This aligns with them selling off parts of their business. They have been strategically selling off parts of their business. For example, they sold their refined products business and exited their biodiesel business. They are also selling off natural gas liquids terminals and some rail cars. This appears to be a deliberate move to streamline their operations and focus on what they see as more profitable areas. Let's peek into how their main business segments are doing. In their water solutions segment, revenue went up by about $21.3 million in the last quarter of 2025 compared to 2024. This is mostly because they are processing more water, which is a good sign that their core services are in demand. On the flip side, their liquids logistics segment saw revenues drop significantly. Butane sales alone dropped by over $74 million in the last quarter. This is largely due to selling fewer of these products as well as lower prices. The propane business also saw a similar drop in sales, mostly because they sold off a big chunk of that business. It seems like this segment is currently a drag on their overall results. In their crude oil logistics segment, sales did go up by a whopping $124 million in the last quarter. However, the price per barrel they got for their crude oil dropped quite a bit. This means they were selling more, but at a lower profit margin per barrel. It shows that even though they're moving more product, the lower prices are impacting their profitability in this segment. Now let's talk about debt. Interest expense for the last 3 months of 2025 was about $63.8 million, a slight increase from $63 million in 2024. While they are paying down debt, the interest costs are still a significant expense. Looking at the 9-month period, interest expense dropped from over $209 million in 2024 to about $194 million in 2025. This is a good sign that their debt management is starting to pay off, but it's still a huge chunk of their expenses. When we look at EBITDA, which is a measure of a company's profitability before interest, taxes, depreciation, and amortization, it tells a clearer story. For the last quarter of 2025, it was over $172 million, a nice jump from $142 million in 2024. And for the 9-month period, it was nearly $530 million. Up from about $420 million in 2024. This shows that their core operations, before all the financial and accounting adjustments, are generating a lot more cash. Their adjusted EBITDA, which tries to give a better picture of ongoing profitability by removing certain one-time items, was almost $172.5 million for the last quarter of 2025. This is up from about $158 million in 2024. For the 9-month period, it reached an impressive $483.8 million compared to $446 million in 2024. This is the real meat of their operational performance, and it is looking pretty solid. Now, let's talk about risks. They are heavily exposed to the price of oil and natural gas liquids. If these prices drop significantly, it can hurt their margins and overall profits. Given the volatility in energy prices, this is always a big risk for them. They also mention the risk of not being able to find and complete new projects that actually make them more money. This is important because in this industry, companies often need to grow to stay competitive. If they can't find good growth opportunities, they might struggle down the line. Overall, NGL Energy Partners LP seems to be navigating a tricky period. They are selling off less profitable assets and their core water business seems to be doing well. The jump in profit and adjusted EBITDA is encouraging, showing their focus might be paying off. However, the drop in their liquids logistics segment and the ongoing risk from commodity price swings are definitely things to watch. They are making progress on debt, which is good, but interest expenses are still high, so what is the verdict? NGL Energy Partners LP is making some smart strategic moves, shedding weight and focusing on core strength. Their improved profitability is a good sign, but the energy market is always unpredictable. I'm cautiously optimistic about their direction, but they need to keep a close eye on commodity prices and find ways to grow their other segments to truly thrive. Alright, that is our breakdown of NGL Energy Partners LP's latest financial report. What do you think about their strategy to sell off parts of the business and focus on water solutions? Let me know your thoughts in the comments below. If you found this deep dive valuable, please hit that like button and subscribe for more. And hey, don't forget to join our Discord community linked in the description where we talk about all things corporate finance. Thanks for watching and well, see you in the next one.